Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
And g'day, welcome to the COB. On this Thursday, I'm Andrew Gagan.
And I'm Juliette Sarli. And Andrew, I mean, it's been a roller coaster week, up, down, but today we took that positive lead from Wall Street, and it's all been about the crypto space as well.
Yeah, also about inflation, I think it has to be said too, because we had that positive inflation read yesterday locally.
Yep.
The focus is going to be on inflation in the US overnight, with expectations that disinflation is well and truly underway, tightening cycles over, of course, expectations that the next move will be a cut. Indeed,
and whether or not that's going to come as early as March from the Fed, that will be a key one for investors to watch tonight. But speaking of that crypto launch, finally the SEC approving these Bitcoin ETFs.
I tell you what, this morning we were confused again because after yesterday's debacle, where we had that erroneous tweet or the fact that the account was hacked, we had that, we sort of looked on Reuters and some of the other news feeds that had been approved, but the SEC account went down. I think they was completely overwhelmed. So it hasn't particularly been its finest hour in terms of its decision making and how it's actually translated that news.
No, but pretty much everyone we're speaking to, I was just talking to Jonathan Miller from Kraken before, saying like this is such a watershed moment for the industry, and perhaps finally giving some validation to those who really believe in the crypto space. Interestingly, Gary Gensler very much separating himself from the SEC, saying he still thinks this does not mean that you're endorsing the underlying point.
No, absolutely. Yeah, that was a really fine point that he made, actually, because that's always been his belief. You can sort of just get the sense that he's done it through gritted teeth, hasn't he?
His arm's been bent behind his back, and it's come through though. And you know, we talked about inflation, we talked about looking ahead to the CPI, all of that helping our market up by about 0.5%. And speaking of the inflationary picture, I mean, softer than expected, as you mentioned here locally. Now expectations, the RBA is done too. That's really helping the retailers today.
Yeah, absolutely. All consumer discretionary actually doing well today, and with JB HiFi, in fact, among them, I think very close to a record high.
It is, 2-year high and close to a record high, and boosting a lot of those other players. All right, let's have a look at some of the sectors and indeed how crypto is faring on the back of the ETF spot approval. Bitcoin just under 47,000 there, and of course Ethereum very much in focus too now. Is it going to get some ETF approvals as well?
In fact, I think that might be a bit outdated, because I was just taking a look at some of the numbers on one of the sites there are tracking some of the cryptos, and the alts are off to the races at the moment. Some, many of those up over 10%.
All right, so very much in focus. And there we talked about JB HiFi towards that record, lifting all the other retailers, or most of them, Premier Investments, and my favourite cheap jewellery spot, Lovisa, under a little bit of pressure.
Oh, you've been doing your bit, but obviously not enough today.
Not enough.
Now, iron ore, also interesting, because of course we've seen that really sharp run up over the course of last year, which has defied all expectations, perhaps from reality. Now finally weighing on iron ore, with futures coming off again, extending their losses for a 6th consecutive session, in fact. And that's, as we see, restocking perhaps by steelmakers in China. And as a result, we have seen further pressure on some of the bigger miners there.
Yeah, but South 32 having a very good day. And just having a look at uranium stocks too. David Buckland from Montgomery Invest was one of my guests earlier today. He says uranium is the space you should really be looking at. Of course, we've seen that huge run up in futures prices for uranium. Boss Energy coming off after a pretty good rally in the last couple of sessions. Deep yellow there, pretty flat as well. And just taking a quick look at some of the other stories that we're following today. We talked about Block and Zip, of course, in different directions, and Fortescue there, and Pinnacle in focus too.
Yeah, indeed. Pinnacle, a bit of a standout, particularly at the beginning of the day, because it's cautiously optimistic about the second half of fiscal 24. Look at a bit of a different story just as far as Worley is concerned, with some allegations of corruption made by Ecuador. That has really weighed on the share price there. A little difficult to actually get to the bottom of this, of what's going on, but
but worth noting they have denied those allegations as well. And checking in on the supermarket, Coles slashing prices on around 300 items by more than 20%, excuse me. Criticism from Prime Minister Albanese that they hadn't been passing on these lower costs to farmers. So Coles has done that. Woolies up 0.4% also in the news a little bit today.
Well, that's despite the opposition leader Peter Dutton saying you should boycott Woolies because, well, they've actually dumped their Australia Day paraphernalia. You can't go to Woolies and stock up for Australia Day on what are they selling? Thongs, flags, hats,
Yeah, absolutely. And, I think he was basically saying you should be able to either buy those yourself or not. And it's not really up to the supermarkets to dictate. But, it is a contentious point. And we're a business show. We won't get into politics.
Well, but on that front, your original point there, just as far as obviously the price pressures, and it's going to be interesting to see whether all the major supermarkets do actually cut their prices, because certainly given those allegations of taking advantage of those price gouging, and they haven't, so a lot of those prices, wholesale prices have come back. That's not reflected in the retail prices.
Indeed. All right, let's get to our guest. Jessica Ramir from Moomoo joins the COB today. Hey, Jess, I know you focus very much in on the crypto space. Just tell us your thoughts on this approval finally and what it means for Australian investors.
Well, it's 10 years in the making, so it was a phenomenal moment. So I guess just an hour before, some people got into work today, we got the news. So it's something that I guess the Winklevoss brothers, partitioned for 10 years ago, and today finally got the nod. I mean, again, really interesting turn of events. Yesterday, they said their account was hacked, and then just a day later, it got approved. But I think if we think about the context of what it actually means, look, 11 spot Bitcoin ETFs are coming soon to a trading screen near you. But it's pretty pivotal, not just if you are buying and selling or adding some of those crypto ETFs or Bitcoin ETFs to your portfolios, but it really validates the continuous buying, just like a lot of ETFs that we see, continuous buying every quarter. So vis-a-vis, naturally, the Bitcoin price will continue to rise up. So that's one thing. But then if we think about the ripple effects, there's a lot going on, I guess, and really to think about. So if you kind of do a diagram in your head and think about, well, what is going to benefit? Well, firstly, obviously, the Bitcoin price rise. And then you think about how you can trade that. But there's those 11 ETFs that are coming onto the New York Stock Exchange. And then think about those that are coming onto the ASX. There's two to watch, one from BetaShares and another from a little-known fund manager. And then think about the companies that are actually benefiting from mainstream now. I guess mainstream BTC getting the tick. So I guess mainstreamification, I guess I'd call it. So think about the companies that are making profit. So on the New York Stock Exchange, you've got two. So you've got NVIDIA, right? And they're already selling chips to miners. And so NVIDIA is the largest tech company making a profit that is got skin in the game, and they're already selling to Bitcoin miners. So they'll continue to benefit from Bitcoin mining increasing, probably at a quicker pace than before, because it's validated to move higher. But also there's a company that we've been speaking about a lot, Block, and Block I know I bang on it about a lot, but they're on the ASX and the New York Stock Exchange. 41% of their rev is from Bitcoin, but they also rolled out a Bitcoin wallet app, so that'll probably see increased take up, and all in all their revenue will rise. And then last but not least, think about those trading houses that are probably going to see or will see a pickup in revenue from transactions and people like us going out there and buying some of these highly anticipated BTC ETFs that are coming on the market. So think about the ASX itself as a trading entity. They're going to get more tickets. And then, of course, think about, financial companies that are going to benefit as well.
Yeah, bottom line, just makes crypto, I guess, much more accessible to the average investors. So it's going to be fascinating to see how that plays over the course of 2024. Jess, also inflation, or should I say disinflation, dominating headlines at the moment too, given we had that positive read yesterday locally. All eyes tonight, of course, on the US inflation read. Interesting to see how that's going to play just as far as some of those consumer discretionary stocks are concerned.
Yeah, spot on. So the plot is thickening in the US for rates to be cut. Again, we're still looking for potential cut in March. That's what the most bets are on if you look at the Fed futures. But we're probably going to expecting to see inflation, I guess, maybe potentially not really shoot the lights out tonight. It's not going to be a gangbuster and inflation slowing more than expected. So no one's expecting that really. And that's because gas prices have actually moved up 21% this year, and the oil price is just starting to bounce up off its low. So there is an expectation that inflation is probably going to, I guess, potentially pick up ever so slightly, but it is all in all coming down where the Fed wants it to be. It's heading back toward that 3% mark that they like, tick, tick, tick. So that does support risk on rally. Consumer discretionary spending will pick up once the Fed cuts are made. And then back here, we know the tables completely flipped, didn't they, after that yesterday CPI sweeter than expected read that we got yesterday, that sweet CPI read. So coming into this year, I mean, bets were on for the RBA to make one more hike. And then come this morning, come yesterday after the data, now bets are on for the RBA to make 2 cuts. So there's almost a 50% chance of a cut here in August, and then almost a 60% chance of a cut in November. So, I mean, add that together. Let's say if we get 0.5%, right, 0.5% by the end of the year. If you've got, say, a 450K mortgage, good on you, that's below the average mortgage, by the way. But that would essentially, if the banks pass on that 0.5% cut, you're probably looking at saving $150 per month. So it'll be a pretty sizable win for Aussies. So all in all, good news. Inflation is coming down stronger than expected. The trends are our friend, and that means, of course, it's good for mortgage holders and it's good for the equity market, of course. So we know interest rates, when they're cut, the Aussie market and the US do pretty well when rates are cut.
Jess, just finally, I mean, we've been looking so much at the mining space. We know iron ore is coming off a little, but every day nearly here at ausbiz, we do have a lithium story. And I spoke to another CEO earlier today. I mean, there's a lot of hope that you will get this market more rebalanced at some point. When do you think that happens, and what does that mean in terms of the outlook for the lithium players?
It's a great question. It's $1 million question. But I think when we think about lithium, it goes back to something that has been, I guess, a key principle when we're looking at any company. And you need to look at a company that is generating revenue and, number one, has got offtake in the lithium space. And offtake is, a sales agreement. For those that are listening, might not know that. So that means vis-a-vis the Pilbara minerals are continuing to hold up, and we're seeing that. And then on the flip side, on the second end of the lithium town, I guess, you've got the small cap miners, and they're really suffering. And that's because today, if we think about the lithium price, also other precious metal prices, they hit new lows. So the lithium price today, before coming into this, hit a brand new low, and that's killing deals, and that's killing small caps. So you're probably going to see in the small caps, you're probably going to see more pain, more suffering, potentially maybe companies closing, probably more M&A. Large end of town, that's where we're seeing the companies with those offtakes like Pilbara. Of course, they were one of the first movers on the ASX, and they're with Great Wall, as we know. So they're holding up and they're pretty resilient. So 2 different markets. Think about backing those companies that have got strong repeatable cash flows and that are already selling their offtake. So just be really mindful that we're probably not going to see a recovery, at least till we do see some potential cuts really baked in to the goods and chattels of companies' balance sheets. And I guess that ripple effect and that flow-on effect probably won't be till later on this year.
Jess, terrific to get your observations and your analysis. Thanks so much for joining us from Mumu.
Thank you so much, guys.
All right, let's have a quick look at the market leaders as we round out the day's trade. We talked about South 32, they're outperforming some of the other iron ore players. JB HiFi getting towards a record, and just touched on Pilbara as well, up 3% there. Iluka and Telix also doing well. All
right, on the negative side of the ledger, let's take a look, and Insignia among the worst performers there, along with Alumina. And we were mentioning bit of a reversal underway today in terms of those uranium miners, Boss among them, and also those problems that are plaguing Worley at the moment, those allegations there.
All right, let's have a look at the small end of town. Some of the winners today. Clearview Technology up almost 13%, Avita Medical, Pan Continental Energy. So a few big movers there. To the downside though.
Yeah, 29 Metals, that was a big step lower there. Along with Winsome Resources, you often see that in the resources space at the moment, along with Firefly and Hillgrove.
And the stock of the day, Pinnacle Investment Management. You were hosting the call.
Indeed, yeah, that was our stock of the day off the back of their more positive outlook for the second half of 2024, the 24 fiscal year. So we caught up with Josh Barker from Macro and Luke Winchester from Merewether Capital for their view on Pinnacle.
We've steered away from fund managers. Obviously, in a tough market, they're benefiting from performance fees. Obviously, if the market doesn't reach a higher watermark, they're not going to get those performance fees over the last couple of years. And then obviously a downgrade in personnel, and it sort of all flows on through there. So it's not something we've looked at, and I think even moving forward may struggle and be a little bit behind the trend of the market. Market boosts, obviously that impact will flow through to these fund managers, but it's not an immediate benefit.
That headline performance fee returning quite strongly. Pinnacle will recognise about $12 million to them as a share of their ownership in the fund managers. Last year that was about $1 million, so you can see strong recovery there. And of course, they sort of tempered that with, as Josh pointed out, a write-down in a tech investment they'd made, flagged some higher costs, and also they've got some debt, which now some higher interest rates are starting to bite into that a little bit. So, look, I think, the announcement is sort of business as usual, and the share price reflects that. The market has probably front-run a return to performance fees given the performance of the market over the last couple of months. And they highlighted that I think 8 of their affiliates were crystallised in this period, but the full 25 are, within a cooee of their high watermark, if not above it already, and have the chance to crystallise performance fees in the second half of the year. So currently trading on 26 times earnings. I think that's factored in, but it's pretty easy hold here for me, given the quality of the business and the job that this team's done of, as I said, building out a business can weather the storms of a normal fund manager.
All right, that's the view on Pinnacle. Has been tough space, obviously, for those managers, hasn't it? Those investment managers. All right, so let's check on what is on the calendar for tonight.
I think it's inflation.
It is all about inflation. US core there, that will be the future, or the focus, I should say. Also got an update there from the ECB. Bit of a view of what's going on in Italy at the moment in terms of its economy, unemployment claims out of the US, and also those ongoing bond auctions, the 30-year happening overnight. Just as on this point, actually, Juliet, maybe more instructive, particularly for the Fed, will be the producer prices which come the following day, given they obviously feed in to consumer prices.
Absolutely. All right, let's have a look at what we'll be focusing in on tomorrow. Obviously, we'll be reacting to the CPI print, but we'll have housing finance for November, also Japan trade balance worth having a look at, particularly as we're watching the Nikkei at that something like 32-year high. And then later tomorrow night, Friday night, we'll get some industrial production trade balance figures out of the UK. And of course, as you mentioned, the producer price inflation print. But that does it for today, and it has been a positive session.
Has indeed. Let's just check where we've finished up. And as you can see, they're up more than 0.5%. It's on the CBO 200, reflected across the board at the moment. I think all but energy sectors higher today.
And the ASX 200 back above 7,500 for those who love those round figures, those psychological points. 7,505 on the ASX 200, which is a gain of 37 points today. But that does it for Thursday. We will be back, or I will be back. You're having a little holiday, a little sleep in.
Not a holiday, but you'll be back. Obviously getting across all the detail tomorrow. I think we can maybe give Bitcoin a miss in the morning.
Yeah.
Although it's going to still make headlines, clearly, given what's just happened. But we'll do it all again tomorrow. See you then.
We will. See you then.